Mike, welcome. It's good to have you with us.
Thanks, good to be here.
Why the change of mind to the 75 basis point hike? What has changed?
Sure.
Even after Fed Chief Powell said at his last meeting, responding to our Steve Leisman, it's off the table.
Yeah, so I think the proximate reason is that yesterday several well-placed media sources, including your very own Steve Leisman, indicated that the Fed had sent out the smoke signals that 75 was very likely. And again, in contrast to the earlier guidance that we heard from Chairman Powell, which you just mentioned. So, as I said, the proximate reason was what we heard from, again, these well-placed media sources. I think the more fundamental reason may have been, I believe, that upside surprise on inflation expectations that we saw last Friday morning in the University of Michigan survey of consumer sentiment. I think that probably is something that really spooked a lot of senior Fed officials and probably led to this rethink over the weekend.
The Fed, as it is wont to say, has a dual mandate. One is full employment that is consistent with price stability. The other is price stability. Right now, it's not worried about employment particularly, even though we're hearing about some layoffs. It is worried solely and fully, wouldn't you say, Mike, on crushing inflation and doing whatever it takes to do that.
Yes, entirely. And if anything, Chair Powell recently said that the labor market is tight to an unhealthy degree. I don't think they want to see mass layoffs, but I do think they want to see a little more balance in the labor market in terms of vacancies and unemployment. So right now, at least for the foreseeable next couple of months, let's say, there's really no conflict between their full employment and their price stability goals. Both, I think, lean in favor of more aggressive policy.
So let's just spin the clock forward to the next several meetings and months. Let's assume that they raise by 3/4 of a point tomorrow. What happens then in July? What happens in September? What happens in November?
Yeah, so what I'd say, first of all, is that I think a lot of tomorrow is about catching up, right? Mm-hmm. So I think almost everyone I've talked to understands that the Fed is well behind where they need to be. So after they've caught up, which I don't think that happens necessarily tomorrow, but maybe after the July meeting, then I think they can be a little more data dependent and start seeing whether the job market is loosening up a little bit, whether inflation is coming down. I'm not sure they want to give as specific a signal as they did in the May meeting. As you mentioned, after that meeting, Chair Powell was pretty specific in the next two meetings ahead, and that didn't work out so well. So I think they may be a little more mindful of the uncertainties here in terms of the type of guidance they give us tomorrow. But I do think they're definitely going to point to the need to expeditiously, as they would say, get back to neutral, call it 2.5% on the short-term interest rate, and then most likely have to go into restrictive territory. So I do think they signal something like that. I'm not sure they give us specific basis point moves for the next few meetings.